that. All right, so a couple of new faces here. Today, Tuesday, we're doing the Tuesday night call, where I'll be going through, the news that happened over the last couple of days, and then also into tomorrow. We do have a big news tomorrow, and then on to Thursday. And then on Thursday night, we'll do the review of news from Thursday into Friday and to Monday as well. So that's how we do our Tuesday and Thursday night sessions. During that session as well, I'll be going through the H1 time frame kind of trades. So shorter term trades, different to what we go through during the currency call in the mornings, where those are H4 time frame trades. If you get a chance, we'll look at some shorter term M15 trades that you can jump into tonight, hopefully get out tonight as well. So looking at shorter term trades for the Tuesday and Thursday night session. But with all that said, as usual, disclaimer comes up. All information shared in this video is not intended to be a trade recommendation. It is solely the opinion and view of the speaker. Do your own analysis prior to entering any trades. Actually what I've found, or I'm trying to write something up right now, is that a lot of times it's not about the entry that causes the big problems for traders. It's more the what you do during the trade and also the trade sizing that matters the most. The entry, a lot of times you get away with not the best entry, but so long as your trade sizing is correct, your risk management is right, you get away with quite a bit in terms of trades. So with that, looking at the news, all right, so today being Tuesday, let's look at what happened on Friday first, because our last session was on Thursday. Thursday, we had the big Bank of England rates decision held at 0.7 or increased to 0.75, but we saw a very big drop in the pound. Okay, the pound actually weakened quite a bit because the bank rate votes were supposed to be 9% voting to increase, but what came out was actually 8 voting to increase, 1 voted to hold. And also the statements or the commentaries in the summary was a little bit more dovish, more cautious than compared to what the market expected. So that's why we saw the pound dollar weaken on Thursday. And those of you who joined us on Thursday night, you saw, we started a call at 8 o'clock, but then very quickly we were done because it just happened at 8, traded or tried to trade it, didn't do too much, and then we ended the session. So from that point, what else happened on Friday? Nothing much apart from the retail sales number for CAD. Was a -2%, expected at 2.4, came out at 3.2. Core retail sales was a -2.7, expected at 2.3, came out at 2.5. So a very big swing from a negative number to a positive. But I think I covered this on a Monday session as well. We didn't see that big strengthening in the Canadian dollar because we also saw the dollar strengthen as well. So the CAD actually ended up sitting in that support level and has been sitting in that support level on Friday, yesterday, and even today, trying to break lower, but struggling a little bit there. So that was what happened on Friday. Then on Monday, nothing much happened. We had Lagarde speaking. We had the Chair Powell speaking, and I went through that in detail this morning. He actually tried to, indicate that the FOMC, the central bank, was ready to increase rates a bit more aggressively at a 50 basis point compared to what the market would have expected at 25 basis point. And they said we'll do it in May. We might do it. They might do it continually until inflationary targets are hit. So that brought a bit of dollar strength into play, but it bounced back up. It bounced back down again actually. So I'll show you more on the dollar index. It's actually moving quite nicely as we had expected already. Today, Tuesday, nothing much else. Okay, I'm not too bothered about Lagarde speaking there. On Wednesday, this is where it gets really interesting, is the CPI number. Tell you briefly on tomorrow morning's call, but I'll tell you a bit more in detail here. CPI year on year for the UK was a 5.5, expected a 6. So what you see here is, if I went into that, is it last month was a 5.4, expected to hold, came out at 5.5. January 5.1, expected to be a slight increase at 5.2, came out at 5.4. So far, we've always seen the CPI number for the UK over the last 4 months here exceeding expectations quite a bit, okay, especially in December. From a 4.8, from a 4.2 expected, a 4.8 came out 5.1. So at this point now, for tomorrow 3 p.m. GMT plus 8, I think that we might see a 6 or even a 6.1. I think it might breach that 6 number there for inflation or CPI year on year. This would actually spur, I think it might actually indicate to the Bank of England they might have to increase rates more, right? So one thing is we could expect them to have a further rate increase into the next few meetings, and also possibly be a little bit less dovish. So the statements that they come out saying that they're going to, be a little bit careful. We might see, instead of the 801 voting, we might see the 900 voting again. We might even see the 50 basis points increase in terms of rates coming from the Bank of England if this breaches that 6.0 target or 6.0 expectations for the CPI. I think it might be 6.1 or 6.2. If we do see that come out for the CPI number for the UK, then we're going to see further dollar strength. Quite scary at this point because we've seen a lot of pound strengthening over the last couple of hours already. If we do see that 6.1, 6.2, then we're going to see pound move even higher. I'll show you that actually while I'm talking about that. So pound dollar. So we've already seen, this is on H4 time frame. I'll show it to you on the H1. For the last 1, 2, 3, 4, 5 candles, 5 hours there, it's already moved up a good almost, it moved up 100 pips already. All right, it's moved up 100 pips. And right now, I think that if it stays at this point, if the pound dollar stays above 1.32, it's a very strong level. 1.32 is a very strong, was resistance, now support. Why I say it's a strong resistance. Hit once here, 17th of March, 19th of March, 22nd of March there very recently. And we went into the bigger time frame, even on the 10th of March, halted, dropped here to the 7th of March at this point as well. Even if I went to the daily time frame, you can see back here in December last year, very strong level at 1.32. So if it stays, if it breaches now that it's breached, and if it stays above this 1.32, like for tonight, it doesn't drop back down, then I think tomorrow we're likely to see further upside for the, further upside for the pound dollar. Quite a straightforward trade, I would say, for the news, for the CPI news on tomorrow at 3 o'clock. I would actually like to see it come back down, bounce, test this level, maybe look like it's going to break, but bounce back up, and then tomorrow at 3 o'clock buy it up. You should be looking at a possible trade at about, you can even be a little bit more conservative at this point and say 1.3220. So above 1.3220, I'll move this line to the, where is it, 3 o'clock timing. We might be looking at that. Stop loss 30 pips. So, Sam, new to the group, had a question in the ECOFIN that yesterday, Why do I put my stop loss that slightly wider? I always have it below my support level, whether it is 30 pips or 40 pips. I'm not that fast about the 10 pips, but it has to be below this 1.32, because what's likely to happen is it's going to hit here, bounce, and go up. So even if it does turn down from here, hit and bounce, this level becomes a bit of a protection to my stop loss. If it does break below this point and then it hits my stop loss, I'm pretty sure that it would not bounce back up and go back up there. If it hits my stop loss, because it's broken that support level now, it would probably continue down towards that 1.31 level. So I don't like, the reason why I put it below that stop loss is to prevent a bit of a fake break or stop and then bounce back up. So, 30 pip, 40 pip stop loss for, up to that 1.33 level is about 70, 80 pips there. A 1:1.8 or 1:2 risk reward ratio towards that resistance level. This would be for tomorrow at the 3 o'clock timing for the news release. What you could also be looking for here while we're talking about it, before I jump into that further, dollar index, right? With the dollar index, what we've seen is that this morning we were talking about it. We're looking at it on H4 time frame. We're saying that now that it's broken above that 98.46 level, I was looking for it to go towards 99, right? It came as close as 98.94. And I said at 99, it's possibly going to turn back down and then bounce back up again. It's doing exactly that. So, we're looking for it to, I think what will happen with this strength of it coming towards the downside, I think we might see it break below this point. We might see it break below 98.46. Okay, this is quite important. Why I think it's going to break below 98.46 is just that momentum push and a bit of a lack of news for the rest of the night. All right, with that no news for tonight, we might see that push lower, no power to push it back up again. So if it does break below this point, what we could be looking for is, right, so now I think it's going to come down to about that 98.35, about that 98.35 level before bouncing back up again, right? So that move towards the downside actually gives us quite a few trade opportunities here. Coming back to the pound dollar again. By the way, if any of you have questions or anything, put it in the chat or feel free to unmute yourself and ask the question at any time. So straight away, pound dollar, H1 time frame looks a little bit difficult to enter right now, but if you went into the M15, you can actually be looking at a short-term trade up. I don't think it'll go all the way towards the 1.33 level. It's moved 100 pips already. I think that if you were to look for the pound dollar to buy up, even at this point right now, my stop loss would be below that recent low point, so about 20 pips there. Even if a 1:1 risk reward ratio towards that 1.3256 is reasonable, I think even at a 40 pip, I think 40 pips looks a little bit too high. So between 20 to 30 pips would be a reasonable trade for the pound dollar on the M15 time frame short term. Break this trade up into multiples. What I'm a bit concerned about for the pound dollar is just that it's been moving in all green, right? You see all that green candles moving up. I'm pretty sure there needs to be a bounce back down again. So that's why I'm not looking at a big move towards the upside. I think anywhere in this move, take some profit, get out, reevaluate, see whether you can jump into that trade again, or there are other trades to jump into. All right. So that's the pound dollar on the M15. If you're jumping into a trade, I would say that it's 5 minutes past the 15-minute candle. Would be reasonable to see an upward move towards that 1.3260 level. Okay. And then also bearing in mind that we have the news for tomorrow. with the pound CPI number. So looking at the news again, pound CPI, I get distracted. At 8 o'clock, we do have Governor Bailey from the Bank of England speaking, right? That's a panel discussion together with Chair Powell from FOMC. I don't think that news will move prices too much. I think that the CPI would probably do most of the work because this is about emerging challenges for central bank governors in a digital world. I don't think there'll be much talk about policy or any of that kind of stuff. So unlikely to move too much there. Annual budget release generally doesn't move prices, doesn't move the pound too much. So I'm not too concerned about the budget released from the Bank of England there. On Thursday, we do have the Swiss franc, the Swiss National Bank policy holding at a minus 0.75. Remember, I was telling you this morning about the correlation between the Swiss franc and the euro dollar, quite inversely correlated. So be very careful. The Swiss in 2016, if I'm not wrong, surprised the market massively when unpegged against the euro dollar, and then we saw the big move in the Swiss franc. So they do have the tendency to surprise the markets a little bit. Be careful of that. But at this point, I don't think we'll see too much of a surprise here. We spoke about the PMIs this morning already. Then I don't normally pay attention to the press conference for the Swiss National Bank. So because I don't really trade the Swiss franc, I focus more on the euro dollar. Because of the inverse relationship, I focus on the euro dollar more, and then instead of entering a trade on the euro and then a trade on a Swiss franc, I'd rather just focus on the euro dollar. And then that's Thursday until our call on Thursday night, right? So not a lot of news happening from now to Thursday, which actually makes it a little bit of an interesting, an easier trade opportunity, I would say. So hey, if you did jump into the pound dollar, might be in a couple of pips right now, right? I'm just checking on this screen here because I got my trade running as well. Okay, so now let's look at some of the other charts. Aussie dollar, okay, let's look at it on the H1 time frame first. So the Aussie dollar has done exact opposite of what we expected. The trade didn't trigger, so we were looking on the H4 time frame to look to sell below 7371. It didn't trigger. Everything didn't break below that point, so I'm not looking here. And remember, when I was talking about the Aussie dollar on Monday, I was saying that if we were looking for it to push up at this point, we're looking for either the buy side or the sell side opportunity. Comes back into play again. I know I deleted it this morning, but then that both buy side and sell side opportunity comes back in. At this point, I would say it's slightly overextended. I'm very cautious. Again, despite the dollar weakening over the last couple of hours, I think it will continue. The momentum is very strong towards the downside for the dollar index. But I want to see some retracement at this point, right? So what I would say for the Aussie on H1 time frame is to, oops, let me zoom in a bit. Aussie on H1 time frame, I would say is to look for a retracement, wait for that kind of, that move up, that slight retracement before looking to buy again, that move up, a slight retracement before looking to buy again. I think that if it does come back down towards that 7.4 level, that's a bit of a big move, but I'd say come towards that 7.420 level, then look to buy again. So a long position either now, a little bit tricky now. It's 8:25, so on H1 time frame might still be okay. If you were to put a stop loss at about 30-40 pips there, take profit at about 40 pips, a 1:1 risk reward ratio towards the upside could be possible for the Aussie dollar. Bear in mind that every time you do an H1 trade or M15 trade, really manage that trade, right? This is not a trade that you want to enter, set and forget. The H4 trades will be the set and forget ones. The H1s will be the ones that you sit there and really watch and monitor, just so that you're ready to close out a trade whenever it moves. I just saw the chat. SMB lies. Yeah. So which H4 candle were we talking about? Sorry, I just saw the chat. Aussie. We're looking at H1. So, to wait for the H4 will be quite a long wait. Okay, so you see a bit of a retracement, a bit of a turn back down on the Aussie. Now, I would actually like to, ideally I would say look to buy there. I want to see that retrace come back down, 25 pip stop loss, about a 50 pip take profit, even a 40 pip take profit there. A 1:1.62 would be nice. So look for that retrace. If you can't look for that retrace, if it doesn't retrace, then I would say look at it on the M15 time frame. There's 4 minutes to the candle close. All right, it's 4 minutes to the candle close. I think it's going to bounce back down anyway. So if the candle closes 3 minutes to candle close, if it closes like that, I think the upward momentum seems to have slowed down a little bit. What we're looking for is something like this, or a slight retrace back down before looking to buy. So Aussie can look to buy in 3 minutes, or to look for it to retrace back down, hit that support, bounce back up, or come around this point before looking to buy up. That makes sense to everyone so far? Put a yes in the chat if it makes sense to you. Cool. All right, so look at that. Look at the Kiwi dollar. So Kiwi, we looked at it on H4 time frame. Defeated me a little bit there. I thought that, I was saying that it was going to bounce at this point. It did bounce at this point. I didn't think it would bounce as high. So it's bounced a lot higher than I expected at this point. If you had entered that trade, got out, fantastic. Same like the Aussie dollar, I would say the Kiwi dollar looks a lot better. All right, I'll take this away. Actually, no. Sorry, I'm just fiddling with this a little bit. I'll put this there. Okay, so Kiwi dollar, I would say I like it a little bit more than the Aussie because it hasn't moved all in that straight green. It's got that slight red there. It tried to come back down a little bit, slightly tested the 69.31 support level. Looks like it's bouncing back up again. I would say that this, okay, I'm going to be a bit wary. I'm telling you a lot of trade ideas at this point. Bear in mind, don't enter all the trades. Don't jump into all the trades, because I know that if you jump into all the trades, you're going to end up over trading, right? So between the Aussie and the Kiwi, I would say Aussie, you have to wait a little bit more. Kiwi looks a little bit more ready to get into. Bear in mind, do your analysis as well. So Kiwi, I could be looking for, at this point, 20 pip stop loss, take profit. I don't have a take profit level. So I'll come to the New Zealand yen shortly. So I have a level at 7180, very, very far away. I don't like that level. I would say that there needs to be one at about 7050 here. Right, so about a 7050. Why 7050 is because how it's reacted to these levels there. So again, coming back to the H1 time frame, right? So that's the Kiwi. I wouldn't even put that 100 pip take profit. I don't think it will move 100 pips. Two options you can take is to set 100 pip take profit and be ready to close anywhere inside this area. So have a 20 pip stop loss, 100 pip take profit level, but don't expect to hit 100 pips. You know, you can close out at 70. So at 70 is a round number, that's 50 pips already. So it's 1:2.69 risk reward ratio. And then after that, you know, if it breaks above that point, you can hold on to the 100 pips level. So key level is that 0.7 round number. But I like the Kiwi dollar at this point right now. Right? Since we're on Kiwi, let's look at New Zealand JPY. Special request. You can see that I don't have any lines on this. For me, I look at all the major currency pairs. So at this point, my thoughts on the carry trade, New Zealand, well, see, quite straightforward is that with our expectation of the New Zealand dollar pushing higher, the Kiwi dollar pushing higher, it just means that we should be expecting Kiwi yen to push higher. And also, while I do that, look at US yen. US yen broke that 120 level, headed towards a 121 level as well, all within the day, right? So today, 22nd of March, right? 22nd of March, it broke above 120 and went straight to 121, retraced a little bit of a price action to signal a bit of a reversal. I think that we're possibly going to see a bit of a consolidation at 121 before a push higher again, right? So if we are looking at US yen pushing higher, we're looking at the Kiwi dollar pushing higher, then with the Kiwi yen, just let me have a look at it on the H4 time frame first. Multi-period high. We're going to see, oh, it's a very high point. Right, so the last time we came to these levels here was in October 2014. So very, very high point here. And here as well. So July 2017 and December 2016. So, but then again, you can see it's a very high point at this level. I think that if we do break above this point, which is that 83.97 or 84 level, I would say let's move this up to about 84. If it does break above that point, then we're going to see big upside on the New Zealand yen, but also a lot of volatility, right? So you see the last time it broke above this 84 level from below, it broke, shot up, came straight back down, and at that point bounced around a lot of volatility, tails and shadows all around before shooting back down again. So just be very careful if you're trading the New Zealand yen. I think it will break, just the momentum of it, just the way it's been pushing up. I think it will break, but be very careful. I think we're going to see a lot of volatility in this area. Okay, so you can trade that up. I would say that if you looked at it on the H1 time frame, you can trade this up, but you would set your take profit level, you know, every 50 or 100 pips, set a take profit, just so that you keep closing out your trades, because you never know when, especially at such a high point, multi-year high point, that it's going to reverse and turn back down again. Okay, or get the volatility kicks into play. So with that, euro dollar. Have you done euro dollar yet? No, not yet. Okay. Euro dollar, you know, not very happy. Not very happy because it came so close. I was so excited just then in the afternoon. I was just sitting there watching the screen, didn't want to do anything else because I thought that it was going to come down. It was coming down quite strongly. I thought it was going to break that 1.0945 level, then I can sell it down and we have a trade to talk about for tonight. But it didn't happen. I scalped it down a little bit, didn't break that level, and then it bounced back up. Interestingly is I'm just checking my trade here. So at about 1 hour ago, I entered the euro dollar at 1.1. So I entered the euro dollar buy at 1.10042. So about that point, right? I entered about 42 at about that point, and then it just closed out on a 30 pip profit at 1.1033. So at about just right at the tail there. That's why I was a little bit distracted. I was just checking my trade there. So it bounced off. To me, why I bought at this 1.1 level is because although it's coming down, short-term trade is bounced off this support level, support zone, and then didn't manage to catch that trade there, but then set in consolidation. With the way the dollar index has been moving, I did a short-term 1 hour trade for 30 pips towards that 1.1033 level. Okay, so do I think that the euro dollar is going to continue towards that 1.1074? Quite possibly, but I think it's going to stop right before that. It's going to be in this region between 1.1060 to about 1.1040. So I think it's going to come up, bounce around in this area, and then hope that it will turn back down and we have a selling opportunity again. So I wouldn't tell you to enter any trades on the euro dollar at this point. Let it move up. You can see that the euro dollar since the 18th has been coming down. It's been trading in this range quite comfortably. So I would say let it move up. Look for it to hit, reject, or even if it goes past and turn back down, reject that 1.1072 level and then look to sell it down instead. I'd rather be looking to sell it down in the H1 time frame, longer term time frame, to sell it down rather than to now try and buy it up right in that middle point there. Okay. I like this one though. This was a trade I got into, made some money on this as well. So euro pound we spoke about this morning. Euro pound we spoke about this morning. I was saying that at that level, at that point of 8350, if it does break towards the downside or if it bounce up towards the upside, you can look for that buying or that selling opportunity. Lucky for us was that it tried to break higher, didn't. Tried to break higher, didn't. It had that bounce, but didn't close above. So I always look for it to close before I jump into a trade on the H1 time frame. Didn't close, and then when it closed below this point, I got into a trade and made about that level 8342 down towards 8320 there. Yeah. So that trade, right, hit that take profit there, closed out, and then now it's bouncing back up. Why it's bouncing back up? Because of the euro dollar pushing it towards the upside. So if you miss that trade, don't worry too much, right? If you miss that trade, what you can be looking for here next, put that aside, right? On the euro pound for the H1 time frame, what I would be looking for is for it to push up. I want it to go back up. I want it to go back up towards that 8350. Then this scenario comes back into play again. This break above that resistance, buy, bounce back down, sell, same trade idea comes back into play. Very tight stop loss, 15 pips stop loss. If you're going to sell it down, 30, 40 pips, take profit towards the downside. Or if you're going to buy it up, 15 pips stop loss, 40 pip take profit towards the upside. Same trade idea. I just need this to move up towards that 8350. It could move up because of the euro dollar pushing higher, or as we were talking about, the pound dollar retracing back down. It's not retracing, so I think it's pushing towards the upside there. If any of you did that trade on the M15, you'll be in a couple of pips actually just then. Now it's retracing back. At this point, I think it's going to push a little bit higher. So with the euro pound, it's possibly going to sit in a little bit of a consolidation across, right? So back to the euro pound. It's possibly going to come back in a little bit, not all the way towards that 8350 level. Come back in a little bit, sit at that point, and then possibly turn back down as if the euro dollar rejects that resistance level. And if we see the pound continue pushing higher, especially into tomorrow with the news, that could be a trade that we can see it reject this level and turn back down again. So I say that more likely I'll be looking for a selling opportunity on the euro pound on the H1 time frame. All right. US yen. US yen, okay, now just then when we looked at it, it looks like it was testing higher, testing the 1.21 level. Looks like it's rejecting it a little bit now. I think that at this point, we're possibly going to see it come down towards 120.50 before bouncing back up again. A small retrace before bouncing back up again. Ultimately, we're possibly going to see dollar strength come back into play later into the session. So I think we're going to see a small retrace before pushing back up. At this point, US yen used to be one of my favorite pairs. I traded it back in many years ago from 119 to that 125.5 highest point. Very nice to trade on the US yen, but what you need to pay attention to on the US yen is, if I zoomed out a little bit, you can see every time it breaks a high point, oops, move this down a little bit. Okay, every time it breaks a high point, there's a big retrace, a consolidate, and then a push higher again. A retrace, a consolidate, a push higher again, then that consolidation there before that push higher. So, you know, characteristics of the currency is quite important. At this point, I think we're going to see that retrace towards that 1.121.50, not all the way. I think towards 121.50, we're going to see it consolidate and then blast through that 121 level, right? So I would say if you're looking for any buying opportunities, only look to buy above 121, 50 to 100 pip, take profit, short-term trades for the US yen, which actually makes the euro yen a lot easier to trade, right? So look at that. This would be a trade that you might be quite keen on. The euro yen on the H1 time frame here, euro dollar pushing higher. Euro dollar pushing higher is likely to push the euro yen up, with the yen retracing a little bit, possibly in consolidation. What I'm looking for is if it does not break below that 133 level, it sits there or it pushes higher, I will look for it to reach that 133.80 resistance level. So you can be looking for buying opportunities. I would say about let it come down, test that 133.00 level, and then you can look for buying opportunities at about 133.15 or 133.20. Tight stop loss, 30 pip, take profit, 50 to 60 pips, a 1:2 risk reward ratio towards the upside for the euro yen, because we're expecting the euro dollar to push higher. We're expecting the yen to actually sit in consolidation and then push higher again. So I think that you just be a little bit patient here. It's going to come back down, bounce around this area, same like what it's been doing all that time. And then after that, push towards the upside. Okay. The next one, I'm a little bit more cautious. I will tell you why. Is the pound yen. I was sitting here the whole day looking at pound yen going, it's a good time to buy, but it's so high. It's a good time to buy, but it's so high. I've got other trades to get into rather than pound yen. It's moved up that much. And the thing about pound yen is it's very, very volatile. You can see big spikes towards upside or the downside. Over the last 2 hours, tried to go down, failed, tried to go up, failed. I think we're going to see it sit across, right? Because it's at a 160 resistance level, it's going to sit right across, not do too much at this point. If it does push higher, I would say not on the H1 time frame, possibly on the M15, or if you're going to scalp it, then look for that buying opportunity. Pound yen will be something that you want to scalp. You want to do very short-term trades. I'll show it to you on the M15 time frame here. You can see that it's turning back down a little bit now. So look for it to turn down. Look whether it's going to turn back, bounce back up, then look for that buying opportunity. Short-term trades on the pound yen, very short-term. Not going to give you a projection here at this point because I think that because it's such a short-term trade, you're possibly looking at it between 160.50 to that 159.20 level. So look for a turn down, look to buy it back up again. Look to buy only, don't look to sell the pound yen because of the way it's been trending, but look for that retrace before you look for that buying opportunity. All right. And then USD CAD. So US CAD, go to the I'll show it to you on the H4 time frame first, right? So H4 time frame here. The last time we spoke about it on Friday last week, right? This was the news, the retail sales number didn't break lower, didn't break higher, sat right in the middle there because we saw stronger CAD, but we also saw the stronger dollar towards the end of the week. So we saw it sit at this 1.2621 level. Okay, it's still pretty much in that range there. Hasn't really given a real direction for the US CAD at this point. So what you want to be doing, and bear in mind, the last time we broke below this point was January, so many months ago, January, and then also when it broke below this point, beginning of January, it just went straight towards that 1.25 level. So again, I would say on the H1 time frame, US CAD H1 time frame, I put in a line here just so it's easier to see. Look for it to break below the 1.2570 level. Has to close. H1 candle has to close below this point before we look for that further downside. All right, so if you're looking to sell the US CAD below that 1.2570 at about 1.2560, so give you about 10 pips there. Stop loss 20 pips, take profit about 50 to 60 pips. 1:2.5 risk reward ratio towards the downside. Quite a good trade, especially given the way the US CAD has been trending, right? It's been compared to every other pair, there we've analyzed, the CAD has been moving down since the 15th of March with not much of a bounce, not much of an upside, slight one there, and then after that consolidate and move further again. So I would say look to sell the CAD down only if it breaks below that 1.2570, about 1.2560, then you have that 1:2.5 risk reward ratio towards the downside. That's also given that we see the dollar continue to weaken as well. Okay, quite likely case scenario there. With that, lucky last, gold. No, wait, that's not the one I always use. All right, gold. The last time I don't trade gold. Don't trade gold, so I'm only looking at H4. I know a couple of you trade gold. So the last time we spoke about it, I said it was bouncing off that 1900 level, possibly pushing towards that 1980 level. Didn't do as much. It went up to that 1950 before sitting right across now. I think that the push up for gold's price to push higher, mainly is going to be driven by the uncertainty in the Russia-Ukraine conflict, right? Conflict going to move towards reserve commodities, towards reserve currencies. It looks like the focus is slightly shifted for the Russia-Ukraine conflict. Looks like, I mean, there were talks about, I'll show you there, talks about, where is it? Okay, Ukraine ready to discuss commitment not to join NATO as well. So it looks like there might be some resolution in the horizon, in the far horizon there. So, you know, we're possibly not going to see gold shooting towards the upside, escalating crazily. I think we're going to see it move up. We're still going to see it move up, but a little bit more conservatively towards the 1950 levels, 1950 level, the recent high point, 1948 level there. Be a lot more careful when you trade gold. It's a lot more volatile than other currency pairs. A lot of spikes up and down because a lot of factors affecting the price of gold, not just the uncertainty in the Russia-Ukraine area, but also, you know, the strength of the US dollar, the policy of the US dollars, FOMC, all that put together, we're going to see more volatility on gold. So very quickly, went through the Aussie dollar, waited out a little bit. We might just have a trade there. New Zealand dollar, quite a good trade idea. Euro pushing a little bit higher, not much to do. Pound looks like a good one. Yen might retrace before looking for a push higher. Euro, I like that one to push higher. Pound yen, scalp it, scalp the pound yen. If you're not comfortable with scalping, then forgo that trade opportunity. That's okay. There's a lot of other trade ideas to jump into. Euro, pound, looking at, you know, right across. I would say maybe reserve that euro pound trade for tomorrow because we have the CPI numbers. I think you're possibly going to see a better reaction and better price movement with the CPI number release and then the euro pound movements, and then the US CAD moving towards that downside as well. Any questions at this point? I've done my analysis. I've done with the news review. Any questions? Any other trades that you want me to look at, or any trades that you have done that we want to do a quick review of?
Hey, thanks earlier today for the YouTube link.
Yeah.
How would you describe in very few words your trading style?
Very few words. That's impossible. My trading style. Well, I mean, you know, being the broad brush idea is I look at the news first to tell me where the general direction is heading before I jump into on a technical trade, technical analysis to do the trades. But, you know, like I was just talking to Sam about it yesterday, was it? Or was it today? Can't remember now. My days are all jumbled up. You know, it's all about accumulating. So I don't really like to hold out my trades too long. I like trades that I can get into within an hour, 2 hours, get in, get out. Even if I don't take profit levels, right? Even if I close out before that, at least I realize my profits over and over again. So I wouldn't say it's scalping as well. I think it's more short, medium term trades, 20, 30, 40, 50 pips, take profit, closing out a trade, accumulating that. And then after that, I would set a slightly longer term trade to let it run. And that one I wouldn't focus on at all.
Nice, because you do look at the 4 hours, so that gives you a certain perspective. That's interesting. And I like the fact that you combine the fundamentals. Do you look at COT at all?
I don't look at COT. Sometimes I just feel that there's just too many things to look at.
Yeah.
Yeah, so I just too many things to focus on. A lot of times, reason why I do the H4 time frame trade as well is, and the H4 time frame analysis, is also because of you guys. So, you know, if it's up to me, then I would just sit there, look at H1 and M15 and M1 and do nothing else, just glue my eyes to the screen. But, you know, trading is really based on everyone's different styles. So I try to approach it in different styles as well, just so that I can, you know, guide different people towards different ways of trading. Because not everyone's going to have the time to sit there and stare at the screen for 12 hours. Not everyone likes staring at a screen for 12 hours.
Yeah.
Yeah.
Thanks.
No worries.
So on the topic of H4, Jin, so what if you're not watching the H4? Is that an issue? And for those that are perhaps only glued to their computers, maybe outside of work hours for a couple of hours a night, would you suggest the lower time frame so you can closely monitor, or do you sort of have a level of comfort that H4 you can put your profit takers in and sort of let it run potentially even overnight when you're not monitoring?
Sure, that's actually the main purpose of the H4, right? The reason why we do the call, you know, in the mornings on the H4 time frame is just something you can get in, do the analysis, set the trade, you know, you don't even have to activate the trade straight away. You can put a pending orders there, take profit level, stop losses, and then forget about it until the next day when we come back into the call again. Has it hit? Has it activated? Should you close out? Has it hit a take profit or a stop loss? You can decide it all from that point. So H4 trades should not be something that you manage closely, because it's just too much emotionally for a lot of people to watch the trade bounce around. I think we have a couple of students here. I think one only, okay? So in here, you know, she's been with my program for a very long time. What I always say is that if you are working full-time, if you are trading part-time, then look at having that combination. While you're sitting at the screen, get into a trade, manage it. You know, you could be looking at the M15 on the H1 time frame, close out your trades quickly, secure the profits, and then before you go to bed, you know, scan through the charts, look to see if there's any H4 trades that could happen. Not all the time if something is going to work out or it doesn't set up perfectly, then don't get into the trade. But if it sets up nicely, then you can be like, you can make 20, 30, 40 pips during the night on a short-term trade, get into an H4 trade, 40 pip stop loss, 80 pip take profit level. Worst case, you wake up the next morning, it's hit your stop loss, you broke even for the day. Best case, you made 40 on a short-term trade and you made 80 on the H4 trade, you got 120 pips overnight. So there's combinations.
Right, yes. So when you say break even though, you mentioned putting a stop loss, you know, on a H4 trade, whatever it might be, 20 pips under entry. Given you're not watching it, how do you deal with potential reversals and hitting that stop loss in terms of hitting break even on those H4 trades?
Oh no, as in break even, as in you made, you know, with your short-term trades during the night, you made like 40 pips, and then in H4 trade you might have lost 40 pips. So net.
Yeah, gotcha.
So,
yeah, I understand.
All right. Any other questions? I like the questions.
What about technical indicators? The course that you've got on YouTube talks about Bollinger Bands and a couple of other indicators. How much of those flavor your trading?
It's part of the part of the analysis that I do. So part of the technicals, the 5-step process. So step 4 is looking at all the technical indicators, tell me whether it's a good time to get into it or whether a reversal is likely to happen as well. So it's part of the overall analysis.
Yeah.
And I sent you the link for that as well, so you can try it out on the MT4. All right. Any last questions before we call it a night? Nope. All right. So we'll call an end to the session now, and then we'll do the pound dollar tomorrow with a review of the euro pound as well tomorrow. With that, take care, trade safe, don't go crazy. Bye-bye.
Good on, Jim. Thank you.